Alright, so in this video, I want to go over my daily TA routine. Basically, when I come to the charts in the morning, what are the steps I go through to come up with my trading plans, to ideally identify a range locally that I can trade, also keeping in mind the context of the higher time frames, and ultimately coming up with trading plans for the day, which for me usually ends up being inside of the local range that we are trading. The first thing that I make sure is done when I come to the charts in the morning is I make sure I have a clean chart. Usually I like to clean up my chart at the end of the day, so then when I wake up in the morning, it's already kind of done and I can just get to doing analysis. But yeah, the first thing I like to do is organize my levels into folders. So, if it is local range levels, I'll put it in a local folder. If it is, a higher term range, I'll put that in its own folder and basically just separate things, kind of keep things organized. I have my daily and weekly levels in their own folder. I have previous day levels in their own folder. I got CDWs in their own folder. And I will also go through and just delete unnecessary levels, levels that have already been tapped or, are not being respected anymore. Or even if, maybe they are being respected, but you have now a better level in that area, then I try to keep my chart clean and delete levels that I'm not necessarily using at the time. And daily open and PD levels, that's also something I typically do at the end of the day because for me, the daily candle closes at 8 p.m. So daily open is very simple to mark out. You just go to the daily time frame, and from here you go to the current daily candle, and you simply put a horizontal line where that candle opened. So if it's a purple candle, then you're going to put it on the body of the candle on the top because it opened here, and since then price has gotten to move down. That is why it's purple. Or, it will be red if you don't use my color candles, but you get the idea. If it's a blue candle, then it will be the bottom of the candle body because that is where that candle opened. From there, it ultimately got to move up and closed higher. So right now, the daily open for today is coming in at 29.036. So I can mark that out. I have a template for that, for daily levels, and then I just put open next to it. And you can see here I also have two other daily levels marked out. The reason I kept these is because I think they are still significant. A daily level is different from daily open. Daily open can turn into a daily level, but it doesn't always do that. For example, this daily open down here did not turn into a daily level. Why? Because basically we had two blue candles in a row. This is what I consider to be a daily level when, we had a candle close and then a candle open. And then from there, the second candle closed lower than its open, basically just leaving wicks above that daily level. Basically, the candles were unable to close above that level, therefore making it a daily level of resistance. It works the same way for support. Like this down here would be a daily level of support. But daily open is a level that I mark out every day because usually it ends up being reactive in some way, especially if there's confluence around it. In this case, the value area high of the larger range is right around daily open. So yeah, every day I will mark out the daily open, and if it becomes a daily level that I think still has significance, then I will leave it on my chart. Daily levels that I'd say don't have as much significance would be ones that have been, tapped multiple times already. So you could say this one down here, we've tapped that one multiple times. Maybe it still can be significant if there is other confluence around there, but typically I try to only leave the most significant daily levels on my chart and the previous day levels. That is another thing that I've been marking out daily, basically just using the session volume profile tool to get the value area of the previous day and marking out the value area high, value area low, and point of control. And these levels will shift slightly depending on the time frame you are looking at them on. especially the point of control. The point of control seems to like to move around a lot. So, maybe if, in this case, the 24-minute is lower than the 12-minute. So I might kind of just put it in between the two. And in this case, this right now is an NDPOC. It's not just a previous day point of control. It is a naked daily point of control, meaning since that daily candle closed, at 8 o'clock, when the daily candle closes, that's also when the daily volume area ends. And so since price does not come back down to tap this NDPOC since the daily close, this is not just a previous day point of control, but it is an NDPOC, and those are typically more reactive. But also the value area high and value area low are some levels that I have also been messing around with, and basically using them as extra confluence inside my ranges. Usually they end up being around the value area high and value area low of a range if you're trading in a range. So yeah, that is another thing that I will mark out usually towards the end of the day. Once the daily candle closes, then I'll go through and mark out the previous day levels. And I mean, in this case, we did get a very nice reaction off the PD value area high. And then before I start looking locally for local trade ideas, I want to kind of refresh myself on the higher term context. Keep that in mind, whether we're in a higher term range or we're looking at higher term market structure. This context is very important. For example, right now, the higher term context is, that we are in a range. We've been in a range for about a month and a half, give or take. And, higher term market structure, I've gone over that many times in my videos. The weekly market structure, the daily market structure, those are very important to keep in mind. The higher term context can help you create a bias. I also like to make sure that my key levels on the higher time frames are updated. My weekly, monthly, daily levels, my higher term support resistance levels. So in this case, I know I had one pretty key support resistance level marked out. So yeah, right here, I got this support resistance level marked out. You can see S/R, I mean support/resistance. And the reason I have this marked out is because it has been very key support and resistance inside of this range. It has acted as key support and resistance many times. Even back here, before we even formed a range, it was a key level of resistance, and it continued to be a key SR level throughout the whole range. Another level you could mark out would be right here, because we had plenty of resistance back here. A little bit of support. We got some wicks off that area, but not a whole lot of support. But then more resistance over here, and now a little bit of support right here. High volume nodes. So, in the case of this range, I'd say the high volume nodes would really be coming in around the middle of this range, because that is where the most volume is. You could also look at up here as a high volume node, even though it's outside the value area. There is still high volume there, also right here. And, you may also look at the point of control as being the highest volume node inside this range. Also looking at liquidity. So, liquidity just basically means where I think there would be stop losses. And, for that, I would look from right to left. And basically just think, if people shorted back here, where would their stop losses be? And I'd say above this high and also above this high. If people shorted in this area, then their stops are probably up above here. If people longed down here, then that would probably be a lot of stops. There's probably stops down here, and also below these lows. And this is very important context because price likes to make moves for liquidity. Price likes to grab liquidity, and so if there is liquidity nearby, then you may expect price to make its way up there. For example, in this case, price is right here at this point. The closest liquidity seems to be around these highs. So that is decent context. You may, think, all right, it is more likely that we will make a run for this liquidity than maybe, let's say, this liquidity, which actually they might be like about the same distance away. Let's see, it's a 4% move up versus a little bit more than a 4% move down. So, I mean, they're pretty close, but let's say we were trading up above the value area high, then you would probably expect, okay, this liquidity is most likely next. And also looking at market cipher to give you higher term context. That's just something I do. I like to run through the higher time frames and kind of see what's going on. For example, the weekly money flow just crossed into the green. Momentum is above the 60 line. We did print a red dot up here showing, somewhat of a local top, but with the money flow crossing into the green and, this VWAP, I was going to say it's not pointing to the downside, but right now it is. It seems to be slowing down a little bit in terms of this move to the downside, right? It was an aggressive move down, and then more recently, if I zoom in, it's kind of started to turn horizontally a little bit. It's still pointing down, right? It's still pointing down, but it's not as sharp as it was back here. So potentially showing signs that this VWAP might want to start to curve back to the upside soon. And the main reason I say that is because the money flow is now crossing into the green. The 3-day doesn't look too bad. Money flow is ultimately still in an uptrend because we are making higher highs and higher lows with the money flow. If the money flow starts to come back down below this low, then maybe we could look at it as like a downtrend in money flow starting. But as of right now, money flow is still in an uptrend on the 3-day. And so these are kind of just things I like to run through and look at to get, kind of higher term context. You can kind of even say, ignoring all this, local stuff, the 2-day is still in an uptrend as well. So those are just some things that I like to, like I said, keep in mind for when I'm trading the lower time frames, or when I'm planning out higher time frame trades. But even when I'm just trading local ranges, I like to keep that higher time frame context in mind. And from there, I then look at more local price action, and I try to build some context there. So if we are in a range, then I would identify the range or the ranges. For example, right here, you could say this right here was one range, and we then kind of broke up and formed another range to the upside up here. Yeah, for right now, I'd probably be looking at this down here as one range, this up here is another range, and, more in general, I guess we have another, kind of larger range inside of the, more macro range. It's kind of just ranges inside ranges. Yeah, very locally, I'd probably be more focused on these ranges as well as the market structure in this area. So, yeah, market structure is the next thing I look at. And here you could say, we had kind of a downtrend forming here. We broke that downtrend and have now, possibly come up to put in a higher high, and maybe we would look for a higher low somewhere to kind of continue this uptrend. It is local market structure, and you could even look at more local market structure and say, like, maybe we're already in a downtrend here. Just kind of drawing a rough drawing here, but for this, you could have said, okay, we already broke structure here. But in general, the higher term market structure is going to be more significant. So I would, in this case, be more focused on this market structure. But since we are trading in a range, I don't focus solely on market structure. But if we see something like a market structure shift at a key level inside of this range, like, that bearish transition that I kind of showed you locally, where we, broke that last higher low, that did occur at the value area high. So that is something significant there. We got a market structure shift at the highs of the larger range, but that could be overshadowed by the slightly higher term market structure that we have going here. And even if we see a move down, maybe it just ends up being a higher low. So those are all things I like to keep in mind as well. If there is any confluence with your higher time frame levels inside of the local range that you're looking to trade, then of course I would keep those in mind. If you have an untapped weekly at the high of the range, which we did, we just tapped that recently. This was an untapped daily prior, but that is something significant as well. And I oftentimes will be looking for longs and shorts at the same time. If I'm trading a range, then I like to take shorts from the highs, longs from the lows. But in general, I like to prioritize trades in the direction of my higher time frame bias. And maybe that means I'll take a little bit more risk with my longs if I'm feeling more bullish, or maybe it means I will be less aggressive with my TPs on my longs, and I'll look to maybe hold it for longer. And if I'm feeling long-term bullish, maybe I will be more aggressive with my take profits for my shorts. I do think it is important to take your higher time frame bias into consideration, even when you're trading low time frame ranges. And getting more specifically into local ranges, if price is ranging locally, which I guess we're kind of trending and ranging at the same point here, but let's just say we are kind of considering this right now one larger range, and maybe we will take it from where price connects to this high to the left, so that'd be right about here, and we'll go with this range context for right now. So once I kind of have my range identified, I will basically look for confluence at the highs or lows of a range. The reason I like trading ranges so much, number one, because price likes to range. It ends up ranging more often than it is trending. Even in larger trends, you'll find that ranges form on the smaller time frames. So price likes to range, and also these ranges give you areas of basically high and low, where the price of the asset is overvalued and where the price of the asset is undervalued, at least in the context of this range. And some ways I like to find confluence inside these ranges is by using, key levels. For example, fibs. You can pull a fib retracement and maybe look for a retracement to one of these key fib levels, and if it's lining up with a key volume area like this 786 is, 786 is lining up with the value area low, then that is some good confluence there. Let's say price kind of starts getting a move to the downside here, and we do come down to that 786, then you can pull a fib from the high to the low, and maybe then the golden pocket will be lining up around the highs of the range. Also recently I have been looking for order blocks at the highs and the lows of the range specifically, and I found that basically order blocks, the closer they are to a swing point, the more useful they're going to be. So, for example, an order block down here would probably be more significant than an order block like right here, just because this one is at the lows of the range. It's the closest to this swing point. And that doesn't mean you can't get a good trade from this order block if there was one there, but this one is below the point of control of the range, so maybe you just get a little reaction, reject from the point of control, and then end up coming lower. So I've been messing around with order blocks, and I do like to look for them at the highs and the lows of the range as well. You can look for wicks for potential SFPs into some of these volume areas. For example, right here we have a wick right above the value area low, so if price comes back down here, maybe you can look for an SFP into that value area low, take out the liquidity from this wick, basically any other ways that you can find key levels inside of these ranges. If your higher term key levels are lining up inside this range, then use that as confluence. For example, the point of control of the larger range is right around the value area low of this local one. And from there, I create a plan to trade those confluences at the highs or the lows, or I should say usually at the highs or the lows. I don't exclusively take trades at the highs and lows of ranges. For example, I might trade this NDPOC even though it's at the middle of the range. It's at the point of control, and it does kind of also line up with my market structure here. So, that is a potential spot for a higher low if we are going to continue this uptrend. So, taking all things into consideration here, I may look to trade this spot even though it's in the middle of a range. But in general, I do like to mostly look for trades at the lows or the highs, or outside the lows or the highs of the range, even if you come outside the value area. If you see signs that this move to the upside is getting weak, then you may look for price to fall back inside of the range. So, for example, you can look for absorption into a golden pocket or, just a fib level at the lows or highs. Or you can just look for absorption at the lows or the highs of the range. Doesn't have to be into a golden pocket, but that is a trade setup I like to look for. So, maybe in this case, if we're going to move down towards that 786, you could look for CVD to be putting in lower lows as price is putting in this higher low. And you would also want to see open interest increasing, showing that new trades are opening up. The downtrend in CVD is basically new shorts opening up. Or maybe you could look for like local absorption. For example, if we come down to this level, maybe you don't see absorption on the higher time frame, like from this low, but we kind of start making higher lows here, and locally you start to see some absorption. You could look for a local SFP into the value area low or value area high. That kind of goes along with, this idea I was looking at. Also, the last two trades I took were basically that as well. Actually, I think that is the long I took. So I will kind of use this as an example. So if I pull this value area back to right here, this was a long that I took yesterday, and for this trade, basically, price started a downtrend here. We had front run the value area low a little bit, and then gotten a little bounce, putting in a lower high right here. And as we came back down to take out that low, we SFP'd it. Basically, price quickly wicked down below that low. We got a bounce off the value area low of that range, and we got a quick reaction. We got to move back above that level. We did not close any candles below that low. We only left a wick below it. And we did also see confirmations on market Cipher. We saw divergences as we put in that new low right here. And we didn't have divs with money flow, but this 12-minute divergence, along with just the SFP confirmations at the lows of the range, was enough for me to want to take a risk on this. And this one ended up being a really good trade. I think I entered like right about here, and I did unfortunately get stopped out before that other move to the upside, but I did manage to capture that move, and I took a lot of profits out at the highs of the range. You could simply look for low time frame divergences at the VAL or VAH, and just simply trade the levels like that. A lot of times when you see divergences at the highs of the range, it often means that a move to the point of control is likely, and maybe even a move to the value area low. Same thing with divs at the value area low. Usually leads to a move to the next significant volume level inside that range. You could look for a retest off a fib level after a market structure shift. So, you could have, technically longed here because we did break structure. Kind of go over the structure again. We had this downtrend, and then we broke that downtrend right here, came back for a higher low before a higher high. And that looks like we got to move down in between the GP and 786. So yeah, we got to move a little bit lower than the 786, but in general, you could have looked at this as we're simply putting in a higher low here. If this structure is going to continue, then the price should not take out this low down here. And, maybe there were confirmations for that. I'm not going to go through and look for confirmations because it's not that important right now. But, looking for retests after market structure shifts is another way you can look for confirmations. And there's many other ways you could plan out trade setups inside ranges, maybe single prints being filled at a key level, whatever works for you. These are some things that I've found work best for me. So yeah, to recap, I basically like to, keep my higher time frame levels in mind, but more often than not, I will be zooming in and looking for trade setups on these lower time frames inside these lower time frame ranges, and basically just using these volume areas to establish high and low for me. I will take into consideration my higher term bias, And there are many different kinds of strategies you can use to trade these volume levels. I went over a few of the ones that I use in this video. And obviously, price action is always changing. You're always going to be in different conditions. But more often than not, you will be able to establish a low time frame range somewhere. Even when you're trending, even when you're in a strong trend, you can still find many low time frame ranges to trade. For example, this was a very strong downtrend, and you still could have marked out all of these ranges and just traded them. And maybe since we were in a higher term downtrend here, your bias would have been bearish. So maybe you would have prioritized shorts inside of these ranges, and maybe a low time frame short at like the value area high could have ended up running all the way down to here. So, pretty much regardless of market conditions, I am more often than not looking to identify these low time frame ranges. All right, well, this was a longer video than I intended, but if you stuck around, I appreciate you for watching. If you enjoyed this video, please consider leaving a like and subscribing, also leaving a comment. I really appreciate all of the support, and I will see you all in the next video.